Hey folks, David Frost, my strategic forecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, October 11, 2018. We're looking at a daily chart of the SPY or SPDR, which is the proxy for the S&P 500. So here we are once again with another thrashing in the market. So you can see where we are. It's pretty obvious by now. Everybody knows, again, what happened. It was a red day across the board. No stone left unturned once again. So where do we go from here? There are so many, I want to call them lessons to be learned from what's going on here and what's likely about to happen. So I've got a laundry list of notes and I want to get through as much data and information as possible in this video. So let's get rolling right away. Before we do, once again, please continue to post comments under the video. They're very helpful. I love the interaction. In addition, hit the like button on the video and share the video with anybody that you think can benefit from this information. So yesterday we left off with, is that the low? And the answer was not likely the low. We had the 100 period moving average. They didn't really spend much time there at all. The market basically just cut through everything once again. It's headed for a location, and that's the $100,000 or $64,000 question is, where is that location? Where is the market headed? So what this is being driven by the larger time frame. So what I mean by that is this is not daily chart stuff that's going on. This is weekly and monthly chart information that's being provided to us. I think it's very important that we start here and work backwards. So what does this mean for the bigger picture? Now, some of you won't like this and some of you won't be surprised at all by this. But the type of decline that we just experienced over the last couple of days does enough damage on the charts from a longer-term perspective where I can say with a relatively high degree of certainty as far as I'm concerned. Now, I understand I can be wrong like anybody else, but this is the way I am looking at the market. I can say with a high degree of certainty as far as I'm concerned that the highs are in for quite a while. And what quite a while means is it's likely in for a few years. Now, that doesn't mean we're not going to have very, very strong and powerful rallies along the way. In fact, we're going to get to that in a few minutes because one should be up and coming. The question is, from where does it occur? That's the $64,000 question. Now, before we dig into the details about the current state of the market, let me just wrap up the longer-term perspective. We're going to have one heck of a rally coming up, and that rally could bring us a whole lot higher than people will believe it can from wherever this low emerges from. And the money will be made on the front end of that rally. The money will be made in the first 2, 3, maybe 4 days of that rally. We can have a deeper discussion at another time in another video about why I feel that longer-term highs are in for a while. Last night we looked at some longer-term charts and we have a pretty good idea of where the market might be headed longer-term on the downside, but nothing happens overnight, and what we want to focus in on the here and now. So where are we and where are we going? So we're looking for a low. However, the low could certainly come in significantly lower than from where we even closed today. You look at yesterday, you look at today, you look at those two candles and you say, why not or why can't there be a third day in a row just the same? And the answer is, of course there can. The market has just come down about 7 or 8% in a couple of weeks. So the velocity at which it's coming down is extreme. That's why the intraday swings are very large. We've talked about that. Very difficult to trade intraday. It is very difficult to be able to get a good entry, have enough staying power in order to withstand a wider stop, and then have a quick enough trigger finger to take profit when they hand it to you. It's a very difficult environment to trade intraday. In fact, I will make mention of the fact, and those of you that have trading platforms may have experienced something similar, but I use TradeStation, and I can tell you that loading the charts today, specifically in the afternoon, was very, very slow. In fact, I was reluctant to even change charts because it took so long for the chart to load. And so therefore, I actually stopped trading. I didn't make really any trades in the afternoon to speak of. I think there was one. And when I realized what was going on, I really didn't trust. It wasn't that I didn't trust the market. I didn't trust the trading platform. And therefore, I just stepped away for the last couple of hours. More importantly, we're looking for a low. You see the bottom trend line all the way down at 261.73. Now, I'm not certain that we're going to get there tomorrow or Monday, for example, but what I am certain of is if that's hit from an intraday perspective, it should be intraday support. Now, look at this here, the 269.64. Now, this is, again, the 269.64 is rather arbitrary. It could be, a certain amount of cents, 25, 50 cents in a market like this, $1 or so on either side of that. But you can see here where we came up short of that number today. Now, tomorrow, if we're down early in the day, am I willing to say that that's going to hold from an intraday perspective? Well, let's take a look back one day and see what happened. On the close yesterday, we stopped short of the 100-period moving average. Was I willing to buy the 100-period moving average this morning when it was hit? And the answer is no, I was not. Why is that? Because the probabilities changed from if we would have hit it yesterday to earlier today, opening up after the type of day we had yesterday. It's certainly plausible that we would have had a day like we had today, and there would have been no high probability trade in that area. However, look what did happen. What happened was 276.50 held, and then really the gap fill down at 275.42 held. So there were two trades available in that area, and there were plenty of traders that did take those trades from an intraday perspective, identifying those areas, willing to take on the risk, and they were rewarded. That's the way it works. Now let's get back to what's going on right now. My thesis is the market's trying to, or will try to, it hasn't tried yet, but it will try to at some point in the near term. And the near term means within the next trading session 2, or really stretched out to 3, but I think we're even closer than that. The market is trying to find a low somewhere. Look what happened today on the 60-minute hourly chart. You see this long tail candle that was put in, and then we did a retracement. Now in the aftermarket session, the market was up a little bit. The S&P E-mini futures were up a little bit. Maybe it's playing off of this retracement. Maybe it's not. There's likely more downside coming tomorrow. There's likely more downside because I don't think we found a low yet. Maybe this hourly chart is signaling a low. Maybe it's not. We might wake up to a gap higher in the morning, and it could be a gap and go, and maybe we found low today. That's entirely possible. Let's talk about a trade for a second. I think this is important because under normal conditions, and this is something that's right out of the course. So this tail candle would represent the market putting in a low under most conditions, okay? Under most of the time. Just say at least 8, maybe 9 out of 10 times. But there's always the chance that it could fail. Now, there's a retracement that took place. We retraced by the closing bell about half of the tail candle. So that's an area that a trader can say, I'm willing to take on some risk. I'm willing to buy this against the tail low. That would mean hourly closes, technically speaking, against that tail low. Now, I understand we're in a market that can move a lot of points in an hour. I get that. But just go with the concept of the trade and think about it in a market that's really under normal conditions, a market that's not moving, 30, 40 S&P handles in a matter of 5 minutes. Okay, normal markets. So you would say against this low, I can buy that. But would you do it at the end of the day? And the answer is no, you wouldn't, because you really have to take on too much risk. What happens if the market gaps down tomorrow? You don't have enough time, and you're subject to what happens at the opening bell. So the prudent thing to do, especially in a market like this, would not be to take that trade on the retracement of that tail candle. wrapping up the spiders, look, we're looking for signs and a signal of a trend change. It may happen with a gap down and a reversal on heavy volume. Speaking of which, look at the volume today against the volume yesterday. 272 million shares against yesterday's volume that was less. So here the volume is all of a sudden increasing, and this is getting closer to a low. Maybe we have to see the market generate over 300 million shares in the spiders to generate that low or bottom we're looking for. It may be a gap down and a reversal. It's hard to tell exactly how it's going to materialize. That's why you have to be able to recognize it on an intraday basis in real time. By the time the market closes, sometimes, we don't know how this one's going to unfold, but how the market puts in a bottom, the market on close could be up 100 S&P handles or 10 SPY points from the low by the time the market closes, or more. We just don't know. That's why you need to be able to recognize what's going on in real time if you're trying to be a buyer and willing to take on some risk with the full and complete understanding that it may not be a low. But I think one's coming. I'm looking for one. I'm beginning to position for one. The real story is, after the last couple of days, nobody really knows exactly where the low's going to be. I have ideas. I'm pretty sure it's going to come in somewhere in the vicinity down here, 265, 266, 267. If we get a real hard sell all the way down here, 261, 262, that's also possible. But this is the zone that I'm comfortable in beginning to look to identify the market making a turn. Now think about what I just said for a second. I said 267 in about the same breath that I used 261, which is 60 S&P handles apart from each other, and I used it in the same breath. And that's why I can't give you a number, because I don't know. If I tell you that 266 is the number, I really don't know that it's not going to go all the way down to 261 and vice versa. There's just no way to know at this point in time with this type of market. Anybody telling you otherwise is just telling tall tales. Somebody will be right. Somebody will have the number to the tick, to the penny, to the dollar, whatever it is. And by the way, could the low be 270? Could it be 270 tomorrow at this trend line that I would have been more comfortable even looking for a low had it been hit today, because I know that it should be good daily chart support at a minimum. So therefore, I know at some point during the day, we should get some kind of reaction from a price level down at 269, 270 in that neighborhood. Could that be the low tomorrow or Monday? Absolutely it could. So look at that span of points. It could come in at 270. It could come in at 260, 261, 262. It's too wide to give you a number and have traders actually take action on that information and be caught in a trade like that. You have to wait for a sign and a signal of a trend change. That brings me to the next thing before we move on to the other charts. This is how it's done, folks. Now, I'm not 100% sure that a low is going to come in, but I'm willing to take on some risk if I identify a low from either an intraday or even a closing on the daily chart perspective. But think about what's going on. Go back in time. If you're new here, go back to some of the videos over the last few weeks. Take the time to do it. What were we saying up here? I was saying, yes, the market can make new highs, and I was giving everybody numbers that if we began closing above, that's what's developing. Otherwise, it's unlikely, and we're still going to see a decline, and this is likely a lower high being put in over here. That's what we were discussing, and I gave numbers that if the market were to close above a certain number, then that lower high was likely to result in higher highs, and we would know where we were wrong. The point that I want to make is that a lot of people thought that I was nuts back here telling you when everybody was bullish that the market looked squirrely. Things didn't look good. There were divergences happening. My favorite market leading indicators were telling a different song. or singing a different song, telling a different tale. Now, when nobody wants the market, right? When everybody is beginning to throw up their stocks, and you'll see some charts of stocks that are just obscene starting to come back down to earth. What are we doing? We're looking for a low in the market. What do you think's going to happen when that low materializes? What's going to happen to stocks that have been selling hard, that are down 20, 30, 40%? They're going to get tremendous rallies when the market finds its low. I hate to do this, and I know it's repetitive because we all kind of know this, but I think it's good to hear it time and time again. What do you think most people were doing when the market was up here? Were they buying it or selling it? Okay, what were we doing? We were buying puts in this general zone up here. Okay, what do you think most people are doing down here, or what most people will do down here, or even down here? Do you think that they're going to be buyers of stocks, buyers of the market, or are they going to start to throw up the market, throw up their stocks, throw up their portfolios, and capitulate, which is what causes the type of volume that we saw yesterday, the type of volume we saw today? This is institutional selling. This is institutional distribution, but in part, institutional selling and distribution is the result of people selling out through their institutions. When you sell a mutual fund or an exchange-traded fund, where do you think that transaction takes place? The volume comes from every direction. We're seeing the increase in volume is typically the sign of a low is near. These are the type of things that you need to learn if you're going to be successful from any point going forward in your investing and or trading career. Don't rely on videos like this to show you and tell you what to do without really understanding what's behind the curtain inside the market, under the hood, how it really works. You want to learn for yourself how it works so you don't have to ever rely on anybody. I'm not going to do these videos forever. Maybe some of you don't realize, but those of you who purchase the Lazy E-mini Trader course and take the course, you get my complete, undivided attention in terms of support to help you on the journey. You'd be surprised how much you can learn in a very short period of time. The IWM, my favorite market leading indicator. What is going on? Where is this headed? Look at this collapse in the IWM. It is pretty outstanding. Look where we are. So we're into a pretty good area. I mean, you really have to narrow down the chart because you don't know what's to the left of this because you can't see it. So let's take a look and see what's to the left of this. So what do? The first thing I do is I just take a long view of the market, at least on the daily chart for now. That's where we are. And I say, all right, I can see pretty clearly that there should be support in this general zone down here. There should be support in this general zone down here, and then so on and so forth from there. Now, we can certainly narrow it down, and these are arbitrary numbers. However, we can see that, you see this big breakup candle? We're coming in to the low of that breakup candle. Now, that low happens to come in. Let me get rid of these lines because they're just arbitrary, and we don't really need them. What we do need is the low of that candle is 152.80. So we know, and there's also some pivots right behind that. So a day before that and 2 days prior to that, there's some important pivots. So in my mind, and this is the way I look at it, that's the market's way of telling me that that price level in there is important. This is how I'm looking at it, right? Here you go into my mind. Careful, it's a dangerous place. The market rallied up from this spot, pulled back to this spot, and then took off to the upside with a fierce, very powerful rally. I think that's important information. What do you think? To me, that's the market's way of saying, hey, this price is important, and by the way, this is a breakout area. Are we coming back to retest the former breakout area? Sure looks that way to me. If I draw a horizontal trend line around where the market broke out and we can debate where the official breakout area is, There is no official breakout area. It's somewhere here. The market broke out from somewhere here, right? This day, the market broke out. So do you want to take it from the top of this day, the bottom of this day, the day before? I don't know. It doesn't really matter. This is conceptual. We don't need to get down to the penny with this kind of stuff. I want you to understand conceptually how I'm looking at this. So what else do I see here? I see this is a breakout area. We're already there, right? So if I draw this trend line in, we're already at this breakout area. Maybe it happened up here and we broke through it, and maybe it's officially down here. I don't know. It doesn't really matter. It's in the zone. We're coming into an area. We should be coming into a low. Look at the volume in the IWM. 67 million shares today against 19.5 million share average daily volume. Yesterday was slightly above 40, almost 50, or about 50 million shares. 47 million shares yesterday. So you can see this is coming into or capitulation type volume. Maybe there's one more day, maybe there's 2 more days, but here's the deal. What else is on this chart? Check it out. Here's a gap. Look at that. Do you think they're going to come fill that gap? Well, I don't know if they're going to come fill that gap tomorrow or Monday, but if the odds are that they're going to fill that gap, and based on how the market traded yesterday, based on how the market traded today, I wouldn't put it past them to come fill that gap. So now what did we just do? Did we narrow down a zone on the IWM where we're really looking for a low? So somewhere in here, right? I mean, here's the low of this breakup candle, all right, somewhere in the vicinity within, pennies here and there. And then down here at this gap, so it's, call it 153 to 151. Is that the zone? Are we looking for a low somewhere in that zone, 153 to 151? I would say that the odds favor that if we're going to see a low, then it's going to come somewhere in that zone. What would be the next area if that didn't work? And maybe it won't work, but you can also already see there's another big breakup candle. And right here is the low of that breakup candle down at 148.5, somewhere in that zone down there. So I'll leave these up here, and we'll see what happens over the next couple of days with obviously not only the IWM, but across all markets. Here's a chart of the VIX. Need I say any more? I mean, there's nothing you can do with the VIX here other than the fact that, and it's worth bringing to anybody that's interested, worth bringing to your attention that while the market is looking for a low, I believe, then the VIX is going to collapse down, from some number wherever it finds a high. Now, when the market is finding a low, you may not find the VIX simultaneously making a high, and that's another signal that the market may be making a low. So keep that in mind, food for thought. We may have discussed that last night. Here's a monthly chart of the VIX, and here's one of the reasons why it's very difficult to give you some kind of a target on the upside of the VIX. I mean, what do you make out of this chart? It's very, very difficult. This chart, with some minor adjustments, looks more like sheet music than actually a chart of an equity or some kind of chart that I can analyze. So this is a monthly chart, and I still can't do much with it. I can squeeze it down to look back in time, but believe me, it really doesn't help. How about my second favorite market leading indicator, the transports? So another thrashing for the transports, down another 1.5%, 153 points. And by the way, I think it's worth mentioning, it's a small puzzle piece, but we'll take any puzzle piece we can get. We're back to the IWM. Was down about 1.43% today. The Spider was down 1.58%. So on a relative basis, the IWM actually outperformed the Spider today, not by much, and it's not a big deal. It's a very small puzzle piece, but I thought it was worth mentioning. It was on my mind. Where are we headed in the transports? Again, they're all going to find low at the same place at the same time. Not at the same place, but around the same time. But here we filled a gap and we cut right through it, and we're coming down to these lows here. So let's go to the weekly chart, see what we find. And what we see on the weekly, we have in sight the 100 period moving average on the weekly chart. Now, I don't know if we get there. It's 400 points away, give or take. Is 400 points a lot? Yeah, it is a lot. But we were down 150 today. We had a tremendous down day yesterday in the transports. I mean, when you go back to the daily chart and you take a look at yesterday, transports were down like 400 points yesterday. I don't remember the exact number. We don't have to calculate it now, but that was not normal. Again, volume confirming tremendous selling. We don't need volume to confirm the selling. Price confirms the selling, but, volume confirming across all markets that we should be coming into a low. I think it's within a couple of days. Will it get to the 100 period moving average 400 points away from here? Maybe, maybe not. But again, we'll know it when we see it. We don't have to look at the transports. We may see it ahead of time. We may not. It is a market leading indicator. So I am looking for a turn in the IWM, looking for a turn in the transports. Interestingly enough, by the way, and I'm sorry to jump around, but there's just a lot of stuff. There's a ton of stuff. I want to show you something else that I noticed today that I think is worth mentioning, and this is one of the reasons why I don't think we're at a low yet, even based on today's close. Now, who knows where we open up tomorrow, but, we talked about this on the hourly chart. Now, look at the IWM hourly chart. Is that the same deal going on? No. So, to me, this hasn't found a low yet. Now, we could have made a case that this was a pseudo doji candle, and if the IWM shot higher, that's what I would have said. You had a pseudo doji candle, could have traded it against that low, but look where we finished. We finished right on that low. Is that the behavior of a market making a low? Not really. Again, maybe we gap higher tomorrow morning, but this is not indicative of a low. Here we go, jumping around again. The triple Qs, technology, getting whacked. Now, let me qualify that. Whacked overall, not whacked today. So here's the after hours session. The market closed. This is the hourly chart. So it's the darker green candle right down here. This is where we closed. This is where we're trading now. I don't know if it means anything. I don't know if it's meaningful at all. But at the end of the day, technology outperformed. The NASDAQ Composite finished down 1.25%. The S&P Cash Index finished down 2%. I find that interesting. Again, keep in mind, we're looking for a low. You're going to see signs first, and then a low will emerge, and then all of a sudden we'll look back and say, yeah, those were the 3 or 4 things that were indicating that they were trying to put in a low. That's the way it works. That's why I bring up all these things. I look at everything. They're all puzzle pieces. Let's look at the financials real quick. We're going to get back to technology in a second. I have another chart I want to show you, along with the theme of they're looking for a low. Need I say more about this chart? I mean, you have to go to the weekly chart. Again, it's the same routine. Were we talking about a bearish pattern? Is this what happens when charts make this kind of pattern? More often than not, yes. Do they like to test the breakdown candle high? Yes. Did we test the breakdown candle high in the XBD? Yeah, we did. Look, right here in the 4th week from, or the 5th week from the breakdown candle, we tested the high, fell away, never went that high again, and look where we are. Pretty incredible how this stuff works over and over and over again. Here's the XLF, and we'll stay on the weekly chart here for a second. Do you think they're going to hit the weekly 100 period moving average? I would think so. Does this also look like a breakout area in here, somewhere in this neighborhood? Doesn't this coincide with the 100 period moving average? Maybe a little lower, come down here, spike through the 100 period moving average by a little bit. That's the XLF on the weekly chart. Now remember, that's a weekly number. So intra-week, now remember, the week closes tomorrow, but just generally speaking, on a weekly chart, they can come through the moving average or any other support or resistance area on a weekly chart intra-week. So Wednesday, this could be at 25, and by Friday, we can close at 26.50, and still the weekly chart moving average would have held. So keep in mind what can happen intra-week. The same thing goes for all the other charts. If you're looking at a daily chart moving average, intraday, you have to give it some room. You have to give it some leeway. Hourly chart down to a 10-minute chart, same routine. How about the SMH? Here's another puzzle piece for you. So the SMH finished down less than 1% today. So technology was down less than the S&P. SMH, which is a leading indicator of technology, was down only less than 1% today, so it wasn't a terrible day. It's been down tremendous. We're stretched in all the markets. We're going to get a snapback rally at some point. From what number? I know the whole story, yada, yada, yada. But this is another puzzle piece. Put it on the table. They all count. Here's the other chart that I wanted to show you. Now, take a look at this. It's Alibaba, and look at this reversal that took place today. Now, is it the perfect reversal? No, it's not perfect, but it's a reversal in my book. Is it going to hold 100% of the time? No. Do they hold most of the time? Yes. Could it retrace? Yes. So if the market's down tomorrow and Monday, is it likely that Alibaba's down, maybe not necessarily below today's lows, but it could retrace a part of this move from today? Yeah, it certainly could. Half the move is down $4 or $5 from where we closed today. So yeah, that's certainly possible. But that's not the reason I'm showing this to you. The reason I'm showing this to you is it's another puzzle piece. We have a technology stock that's been taken out behind the woodshed. Here's a weekly chart. Now here's a horizontal trend line at 143. I think this area is considered a breakout zone, so I'm looking for Alibaba to make a low somewhere in this neighborhood. So we go back to the daily chart. Does it look like Alibaba's trying to put in a low? What was in the news cycle today? Now I know I'm not supposed to talk about the news cycle, but this ties in. Now, follow this along. So today we're starting to hear that Trump is going to meet with President Xi over in China. It's obviously about the tariff situation and the trade talks and all that stuff. Alibaba is a Chinese stock. Here's the Chinese stock market. Now here's a daily chart. This doesn't do it justice. We've looked at this before. Look at the daily chart. Now, the monthly chart. This is not the actual Shanghai index. This is a proxy. This is a Dow Jones proxy that trades in concert with the Shanghai index. But nevertheless, the charts look the same. You can see what's going on here. Wherever this low is going to be, is it right where we are now, or is it down here? Where's that zone I'm looking for? Right here, maybe a little higher, something like that. Is the low where we are now or down a little bit lower? Even that third line all the way down there, I don't know that that's likely on this move. But the Chinese market has been down for over 3 years from the high, and it's been down from this particular high, which was in January, all year long. It's going to find low at some point in time. Is Alibaba signaling something to that effect? Maybe it is. What's going on over at Amazon? What does that look like? Does it look like Amazon's attempting at least to put in some kind of a low? Is that a pseudo doji candle? We didn't get to the 200 period moving average, but we came down quite a bit from where we were. From the lower high, we came down, 350, 400 points, something like that. I don't know. I'm just eyeballing it. I don't even know the numbers. So there's Amazon. Looks like it wants to put in a low at least. What does Apple look like? Well, looks like something very similar. What does Facebook look like? Facebook was really a broken chart. That looks like it's trying to formulate some kind of a low. What about Netflix? Netflix was down today, but it came into its 200-day moving average. Here's a low down here. It's trying. It came into a very important zone down here. I wouldn't be surprised that Netflix isn't trying to put in a low. Google was up today. Is Google trying to put in a low? Here's another Chinese-related stock, up 2% today. There's a reversal day for you in Baidu. So you can see what I'm looking at. When I look around the world, I want to try and collect as many puzzle pieces as I can to put the story together. Look at this. Over in the gold complex, holy cow. I mean, I wish that I could say everybody was long for this because I was pounding the table, get long for gold. No way, no how. Nothing here was indicating anything like this would take place. However, when you take a closer look, and I have to be clear that I really haven't been paying too much attention to gold lately. I've had my hands full with a lot of other stuff in the markets, but look at what we have here. So here's that 1184 area. We know where that comes from. So we have this big down candle here, and then we have it's not a reversal candle because it's really an inside candle to the lower low, the low candle, the last breakdown candle. But look what happened. We started consolidating inside the breakup candle, if we can call it that. We have to call it that. That's what it is. It just happens to be inside of a larger breakdown candle. Now, I'm looking at it now, and I haven't really looked at the weekly chart in a while in gold, so I really didn't notice this until today, until it became obvious on the up day. But would I have bought that is the question, and the honest answer is No, because it was a candle inside of a candle, and I don't like those. They're unclear. You don't know which way it's going to go. Is the breakdown candle, or is the market consolidating inside the breakdown candle to go lower, or is the market consolidating inside the breakup candle to go higher? And I would say it would have been no better than a coin toss, so I wouldn't have taken the long trade anyway. And I got to tell you, that's the honest answer. Crude again crushed. Unfortunately, I did not take a short position in the hot zone once again for the second time. I have no excuse, and I will be wearing the schmuck shirt. Where are they going? As long as they continue lower, they have to go one place in my mind, and that's this breakup candle low, 50-period moving average right down here, happens to coincide with 69.5. So say $69 or something on either side of that is likely a downside target as long as we continue lower. Nothing on the hourly chart, for example, tells me that a low has been put in, so we'll just stick with lower is likely in crude, and I'll be wearing my schmuck shirt along with the hat. And with that, folks, it's everything I've got. I'm going to wrap it here tonight. I'm David Frost, my strategic forecast. Thanks for tuning in for another episode of Common Sense Market Analysis.